being just a normal candlestick in a normal body, candlestick with a normal body. We had other types of candlesticks. Right, we have a hammer. After having a hammer, we can have same hammer facing down, and we can have two candlesticks forming an engulfing pattern, meaning inanebanyanyana at a certain extreme low or extreme high, followed by a hole which engulfs the entire size of this small one. And like the pin bar, which looks like a pin, it will be a small wick on top, followed by a pin bar, which will just look like this. Okay, pin bar. Yes, or it can just look like a upside down. So these are interesting candlestick patterns they lowering in the market. We're going to look at them and see in determining where to buy and where to sell. So today we're going to talk about market structure and how we can take advantage of structures they're forming in the markets in combination lay candlesticks. So basically, the market structure, we're just looking at the way candlesticks are moving in general. What direction are they picking? What direction are they choosing? Are these candlesticks going down, retaining at a certain point and going up? How they fit to a certain point, they go further down, reach the same level, go up, and go above the level into come back down to it. What pattern are we having in the market? So let's this entire market structure and see our trading decisions because in this latest videos we are now going straight into how to make profits and losses using market structure, using candlestick patterns. But a brief disclaimer, candlestick patterns are as accurate as possible. Sometimes hara market structure failure, but not at certain extreme points. But for us, what is interesting is to find candlestick patterns at extreme levels, be it a level in Eludimaholo, and then the market came down, tested that level again, and we look at that level or now what can we have. So let's go to the live chat. So in these videos now, we are not just going to draw on the drawing board, we're just going to go straight to the market. So this is how the market looks on the 1 hour time frame. Remember, we had different time frames. They have representation on what the market looks like for that time frame, but those time frames when you get to the topic of using multiple time frame analysis in order to make our trading decisions. But for now, let's just focus on this 1 hour time frame. So this is the 1 hour time frame here, the currency pair GBP USD. So meaning the GBP as our base currency, which means GBP dula ele 1 pound ele kanale how many US dollars. This is what it means, guys, currency pair. And the truth is currently price mona, if you can see mona mo hunting. Let me make a better cursor. So if you can see here, we are seeing 1 British pound ele kanale 1.3616. Remember, ignore the 5th decimal place, that one doesn't matter at all, the 5th one. We are saying 1 pound is equals to 1.3616 of US dollars. And this is the entire market structure able to candlesticks across different prices. Relay down here forming this large red candlestick. Monana, the market was saying, you see, go straight and go to see the price at that candlestick. The price was 1.3494. So abana this market was down here and hereby silence your price went up. So ha re fihla to an extreme low e kanyana re khutlela to this low level here. Let's say the market instead of going up from this point to go down, and then we go to this point down here. This was going to be an interesting era mo re kan di trading decisions tsa rona. So ane re fihla tlase mona, we're going to look at we're going to look at this level and say this is a potential level in the market can potentially reverse and go up from this level. So it's a level where the market can start going up again because it once tested this level. This is just the way the market is programmed to do, if we may say, but it's not exactly about programming hakalo as if this is an algorithmic thing, but it is the psychology about who are buying the pound and the dollar, because everybody wants to buy the pound when it's cheap and sell it when it is expensive. So meaning when the price was down here, it was a little bit cheaper. Let's say batho miss an opportunity to buy the pound when it was this cheap. So about this market structure and say I do want to buy the pound, but I don't want to buy it up here or here because money it looks a bit more expensive. Where do I want to buy the pound? I can back to a level you nearly cheapy gotten previously. So how shall I make a structure nearly cheapy, and then you come down here and say this was the cheapest price for this day. So high can you lower the market and then come back to test this level again. You say, oh look, the market is back to that extreme low level whereby the pound is very cheap. And what am I going to do? I'm going to execute a trade. I'm going to buy this pound at this cheap level and hope that it appreciates in value, so that later when I sell the pound, I sell it really expensive, or when I exit my buy position. But the good thing about in Forex is that when you buy a currency pair, you make money, and when you sell a currency pair, you make money. What do I mean by that? I mean, if you buy the pound at this extreme low level here, you are buying it. You see, it sounds like you're losing money by buying it, but as soon as we reka and buy it down here at this cheap level, and then its value increases, you are making money by the pip okay, I'm satisfied with buying the pound. Let's say you buy it down here and then it goes all the way up in the high filter to this level. You are say I'm satisfied with this movement from here to here. If this was at 1.3494 and then you exit at 1.3595, what now is just a difference of 10 pips, 10 points, and then you say I'm satisfied with this 10 pips, and what down from movement to here. Similarly, if you can sell from here down to here, you will make money too. So whether you buy or you sell, you still make money at the same time. So that's a good thing about the Forex market. So the psychology behind market structure, the way the candlestick presented demo atlas, is just to show you buyers and sellers across different prices interact. Are they selling hard here? So you know, the bigger the candlestick, the bigger the pressure to a certain size. So if this is a large red candlestick, it means so when sellers and they push this market all the way down here, and buyers immediately started pushing the market up, more buyers. So if the market is going up in general, regardless of the color of the candlestick, it means so buyers were in control. Those who were buying were we had more buyers than sellers if the price is going up. But if the market is going down, then we have more sellers than buyers, because you'll see a seller, a buyer, followed by a seller. So generally, depending on our side dominant, you'll see more candlesticks go into that direction. Let's make an example at this level from here to here. We have more red candlesticks going down than green candlesticks going up. Green candlesticks buyers, red candlesticks sellers. So that's just the psychology of the market. So what we want to do is to see some of these candlesticks patterns happening at extreme levels. So today we're just going to talk about one candlestick pattern bonang right here, which is, let's say, the engulfing candlestick pattern, or tweezer tops. Remember tweezer tops. So if you can see this level here, market was going up. From going up, it came back down to this level, which was the high level of the day, and then came back down, came back up again, and then so this means where buyers and sellers, they are taking their trading decisions at this level. If we can just, let's highlight this level to show if people are interested in this level. So at this level, if we are seeing trading decisions being made. But how when I get this market went up and came down, when it came up here, we have these two green and red candlesticks of the same size, but just that this one in a bigger wick. If I zoom in, you can see what I am talking about. These two candlesticks, they look like tweezer tops. See, well, when you draw them in our drawing board, they look perfect, but the market doesn't always give you perfect structure. So here we have these two candlesticks which look like tweezer tops. So when the market came up here, we are saying elafita to this level and then came back down. When it came back to this level, we saw this pattern happening, the tweezer top pattern, and this market started going down from that pattern. And how when you came back here, we have this pin bar, this green pin bar being formed at the same level. We have this tweezer top being formed. So this is another candlestick pattern forming at an extreme high of the market, according to the market that we are looking at right now. So these are the things that you look for in the market. And as you can see, if we zoom back a little bit, we have this level down here, but we cannot talk about these two candlesticks. So the one, we have this indecisive candlesticks with a large wick, another large wick, the next one large wick, same. This is another candlestick pattern that we look at, but we cannot talk about it yet because I also cover the topic of support and resistance. For now, the release I feel at the extreme high points, but we haven't really gone to the topic of support and resistance, supply and demand, which is those levels in the market. We look for our trading decisions based on now at those levels. But since we haven't covered those candlestick patterns at those levels, maybe we can just skip them for now. But you can see now in this market where we have this patterns. The market usually takes the opposite direction at the get out. But if you can see, candlestick patterns they appear almost everywhere. But where do we trust them the most? The market came down, happened, and then we see will we have a candlestick pattern? Then if we have it, we can take our trading decisions. So this green pin bar here being formed, high negative who is a close. We are going to wait maybe for the next candlestick. Will it close as a red candlestick, meaning buyers will want to push this market higher above this level? And if that's the case, we're going to place our sell here and then watch this market collapse, and we make money as the market crashes, which is a good thing in trading, that we both make money when the market crashes or when the market rallies. It doesn't matter where the market is going, whether things are bad or whether things are good. What we want to do is to take advantage of every situation that the market presents. So let me try to scroll further and see if on this let me switch to the 4-hour time frame. These candlestick patterns, you can find them in any time frame. It doesn't matter what time frame it is, you can always find them. So this is how the 4-hour time frame looks like. Just another time frame that shows us candlestick patterns. So here we have this pattern being formed here, the engulfing candlestick pattern. We have a green candlestick pattern followed by a large red candlestick pattern at this high point in the market. And this would be another pattern you know your trading decision based on, because the market was going down, went up, went down, and when it came up here, we're going to take our trading decisions here based on this candlestick pattern. If I zoom in a little bit, you will see we have engulfing candlestick pattern. We have a green candlestick followed by a very large green one that is almost twice the size of this one, but it is not that perfect because, as you can see, initially a very large wick. So maybe someone would ignore it and say this is not engulfing candlestick pattern, we just leave it. And if you can see, let us monana, we have this rejection candlestick. Basically all these candlestick patterns, I prefer to call them rejection candlestick, because usually how to get that the market might start going in different direction. So you can see the market was going down hard, like harshly, it was going down, the market was crashing. When you go to this point, we had this candlestick initially different from others, long wick to downside, another long wick to the upside, very small body followed by a very large green one. The market was hood and then it went up to this level. So we have all these candlestick patterns that when we see them happening, we take our trading decisions, but we must always filter them because these are almost everywhere, which is when we get to the strategy part, what I trade every day, what I look for in the markets. You will see that I don't really focus on this candlestick patterns that much compared to the market structure overall, but it is important as well to learn about these candlestick patterns because when they occur, you want to take your trading decisions based on them, and that is not a bad thing at all. So okay, well, they don't appear every time, so they can take a while for you to take ones that you really trust that much, so they don't occur all the time. Okay, let me switch on to another currency pair. Let us go for the euro versus the United States dollar and see if we can find any candlestick pattern that we may like. And if we don't, it's no problem. They do appear, but they don't appear all the time. Okay, so here we have a market that was going sideways here. So the market was just going, it wasn't going up by a far extent and wasn't crashing that bad as well. It was just going in a range. But we have an interesting structure right here. You see this red candlestick that forms after this large green one. Look what happens after it forms right here. Let me zoom in a little bit so you can see it. So this market went up from here, large green candlestick, large, but when you go to this point, we have this candlestick that looks like a downward facing cross, like the cross in religion. So when you get to this candlestick that looks like a cross, exactly like the Jesus cross, if you may say, but facing upside down, we see it being followed by market momentum shifting from going up to crashing down. So it is interesting when you see something like this happen, the market that is pushing up, and then when it gets to a candlestick like this at an extreme high, we see the market changing direction. Similarly, we have this one right here. The market was going up, came a little bit down, and we have all these many other candlestick relation candlesticks, but they don't matter because it's just so many of them. But when we get to this one, this is when after it is being formed, you see the market go lower. So as you can see, these are different types of candlestick patterns and where they occur in the market and how you can use them in order to buy or sell. Look at this one here. This is the last one that we'll talk about. The market was going up for a while. You see this? The market is going up, and when it gets to this extreme high level, remember, extreme high levels, they're not just random levels. We're not just saying if the market is going up by a significant amount, okay, this is an extreme level, this can be an extreme level, this can be, but how sure can we be that a certain level is an extreme level? It is we zoom backwards and see if the market was once at a certain area. And if you can see here, of course, yes, we were once at this high level, came down, never went back to it, but here we came back to this high level from the past. When we get to this level, we are now going to observe what is going to happen in the market at this extreme level, and just look how beautiful this rejection candlestick pattern is right here, this extreme level. So we can just highlight this level and say, okay, we are now interested in this extreme high level from the past. We want to see what is going to happen. No, bad drawing. We want to see what is going to happen, and just look, we have this green candlestick. Look, the one that follows it is a candlestick that has a long wick, meaning buyers wanted to be in control, failed to take control. Sellers tried to push this candlestick down, they also failed. And when it was time for the expiry of this candlestick, which is a 4-hour candlestick, after 4 hours during the formation of this candlestick, when the 4-hour time elapsed, now the market started edging lower after the formation of this rejection candlestick, which we can call it an indecisive candlestick. See, let me zoom a bit. Look at it. Just look at this candlestick. After it formed, the market started going lower. So if you were active at that moment in the market, you are going to take a very simple trading decision. You're going to say, okay, after this candlestick forms, I want to see if the next candlestick will be red or green. But if it is red, considering that this is an extreme high level in the market, I want to take my buy order after the formation of the next candlestick. So my first confirmation that this market wants to go lower is first this candlestick here, which is an indecisive candlestick. My second confirmation is that at this level, previously, if we go all the way back, remember, second confirmation is that if we go all the way back, we have this level of price here between 1.1905 to 1.1890. We have this level being tested in the past, and we saw the market come to this level, go down, come back to here again, and this is the second confirmation that, well, this market might want to go down again based on the past. So when we get to this level, we say, okay, now we're just waiting for another confirmation. After this rejection candlestick forms, we want to see another candlestick going a little bit low, so that after it forms, we now say, okay, the market failed to go higher by creating a green candlestick. So after this red candlestick that forms after the pin bar or the indecisive candlestick, we put our sell trade here. So as a trader, you are going to sell at this level. You're going to sell, and you're going to make money for as long as the market goes down in your favor. So with that said, thank you for watching this video, and